Where is Bitcoin going to be in 18 years? It's not going to be chopping sideways for another 18 years. I don't think that's going to be happening. We've not seen this before. Bitcoin's had its IPO moment, and really the ETFs are that IPO moment. I think we go down to go up, or we just go up. I don't want to go below 95, that's for sure. However, there will come a time where we simply run out of sellers. For me as a hodler, if you're going to give me Bitcoin with an 8 handle, I am going to step into that all day, every day, because 50K is $1 trillion, 100K is $2 trillion. I believe in 2024, we proved that we're $1 trillion asset.
Today, I'm excited to welcome James Check to the podcast. James is an on-chain analyst, co-founder of Check on Chain, and host of Check on Chain on YouTube, helping us navigate Bitcoin's volatility. Great to see you again, James.
How you doing, Paula? It's good to be here.
You recently became a dad. Congratulations.
I did, yes. We've got a little boy who's he's 8 weeks as of today, so he's doing very well.
How has life changed?
Massively, and like it's in ways that you don't really expect. Like the first one is that you come to appreciate the very small slots of time that you get to yourself. There's like a pocket at the night where about 8 p.m. 7 p.m. Mum's gone to bed, baby's gone to bed, and I just get an hour to just sit there, catch up on a podcast, catch up on some reading, even just like doing the cooking. So I do a lot of the cooking around the house because, Mum's got 10,000 other things to deal with. I enjoy it. I mean, I like cooking in the first place, but it's a time for me to just like put my earbuds in. I don't mind doing the cleaning. I don't mind doing the washing. You learn to appreciate the very small things in life because they give you that snippet. But I also think that there's a freeing aspect, which I'm no longer the most important part of my life. That's kind of a very freeing. It's quite challenging and daunting for a lot of people, but I certainly like the idea that, life is bigger than me now. And I have a responsibility that goes well beyond anything I've ever had before. So it's quite a remarkable journey.
And you're going to be raising a Bitcoin baby, teaching him about Bitcoin early, I'm sure. Do you have plans for that already?
Oh, yes. No, the boy's already got more sats than most people on the planet. So he's slowly stacking sats. And that's the other thing, right? So for years, I've been stacking sats for myself. Now I stack sats for him. So from a tax basis, it's not my problem anymore. Like it's his problem. But I just think about, when he gets to, he turns 18, moves out of home. When he gets to that point in time, if I keep up that DCA routine, what's $1,000 going to be worth in Bitcoin by the time he turns 18? Bitcoin is 17 years old. Where is Bitcoin going to be in 18 years? So that concept, I think, is really interesting. I've been keeping track of, like, generally speaking, whenever I've been buying Bitcoin, like obviously I track it for my tax purposes, but I just stack, I don't think too much more about it. For him, I'm actually curious because I have a very, very defined timeline. 18 years, or when he goes to school, 12 years. I want to know what $2,000 is worth. What is $1,000 worth by the time we get to his age, when I need to pay for his school? What is that $1,000 in Bitcoin going to be worth compared to what the school fees are? So I'm actually tracking his individual purchases more closely because I'm curious from the inflation perspective. Where do we end up in, 12 years, 18 years time?
Do you have an idea of such a long projection? And of course, Bitcoin has to stay decentralized and secure all that time. But do you think about that long-term projection?
Yeah, totally. I mean, we're literally doubling Bitcoin's life on that kind of timeline. So a lot can change. I mean, a lot has changed in the last 2 years, 3 years, let alone 18 years. My expectation is, people are talking about it, but the Treasury Secretary in the US, Scott Bessent, tweeted about the Bitcoin white paper on Halloween. I mean, guys, we have progressed to we're not early anymore, that's for sure, but that is a fascinating milestone. That kind of shows that this thing is on the radar in a serious way. And it is there's a lot of people have been saying that, but the government's going to ban it. It's like, it doesn't look like they're going to ban it to me. It kind of looks like maybe there are some plans going on behind the scenes. Where this thing goes is it is anybody's guess, but I'll tell you what, it's not going to be chopping sideways for another 18 years. I don't think that's going to be happening.
Speaking of chopping sideways, you coined the term Chop-Solidation, which is an amazing term, which is the perfect description of Bitcoin moving sideways. And tell us what you're thinking about that right now. We're still chopping sideways.
It's amazing, isn't it? So Chop-Solidation is the concept of it It actually comes from a technical indicator that I use called the choppiness index. It's a non-directional tool, but it just helps people understand when have we trended for long enough that we need a rest. Markets don't go up or down in a straight line. If they go very strongly in one direction for many weeks, many months, it usually needs a period of consolidation to kind of acclimatize. Now, we've seen this chop-solidation playing out. Now, this is quite unique for this cycle, this kind of up sideways type pattern. We've not seen this before. A lot of the high octane Bitcoiners who've been around for many years are like, hey, where's my volatility? What's going on? And I totally get that. But then there's a lot of TradFi guys. And like, I think about my old man. My old man owns Bitcoin. He bought it in 2020. He rode the bull. He rode the bear. He told me all about the bear. Every day he was telling me about the bear. It was horrible. And then we get to 2023, 24, 25, and like now he's very comfortable with it. He's already got his initial investment out. So he's basically living on house money. And he's quite happy to actually start thinking about rebuying. He's looking for key levels to step back in. That is the very, very different investor to your average hodler. He's retired. He's got a more conservative portfolio. He's going to last for the next, 30 odd years or so. He doesn't want to take too much risk, but he is becoming more comfortable with it. So I think this choppy dynamic, and there's a lot of factors driving it. I think certainly there's been a lot of long-term hold to sell side, no question. That is just a huge topic that I think more and more people are starting to come around to. Really important key element. Jordy Vista actually put out a really good post. I mean, I've been talking about this sell side for a long time, but credit to him for really giving it kind of a narrative or a story. And he was basically saying that like Bitcoin's had its IPO moment, and really the ETFs are that IPO moment. And his core thesis is that at that IPO moment, all the insiders, the people who've been around, whatever the company is, whatever the asset is, who took the early risk of it going to zero, they decide to cash out. And for them, they actually just don't care. They don't care about the future gains. They've already won. They are so in the money, they've already won. And I just think we're seeing a lot of the sell side at the moment is two parts. Some of it is coming from those like early risk takers, multi-cycle holders, even just single cycle holders. And the other one is coming from bored momentum traders, people who have only been around for 6 months, but they're watching Nvidia flying, they're watching gold flying, they're watching silver going up. Everything except Bitcoin is rallying. So they're like, why am I here? Get out of here. Let's go and move somewhere else. Now, those guys, they're going to come back. By the moment Bitcoin starts moving, and it will start moving, they're going to come right back. So that's kind of a temporary in and out type dynamic. But the IPO moment, I think, is a really clever, simple framework to just help people rationalize why would someone sell when Bitcoin has so many millions left to go? It's like because these guys they've won. They've won so bad. They are just happy to de-risk. And, they've done what they had to do. They did the initial buying when no one else wanted to buy this thing. They got Bitcoin to a $2.5 trillion asset. Now is just their time. And, I think about from my perspective as a hodler, I'm certainly not in that position. It'd be nice if I was. I got in the 2017. I only really worked it out at the end of 2018, start of 2019. But really, my stacking era is like 2019 onwards. And I imagine if the price goes up 10x, right, we get up to $1 million, which I also think is very, very, I think it's on the cards. I think about where those guys are who bought in 2013 or 2014, or were buying at $250 in the 2015 bear. They are where I aspire to be in a 10x from here. They're already there. So can I see myself in their behavior pattern? Absolutely. We've all thought about it because at some point in time, life is more important than your Bitcoin. It's the only thing that is more important than your Bitcoin. And like for me, we mentioned before, I got a kid. At some point, he's going to want to go to school, right? I'm going to want to send him to a decent school. That's worth more than my Bitcoin to me. So it is going to be sold in order to facilitate life goals. So I certainly think that a lot of Bitcoiners are getting to that point in their life cycle where they're like, the Bitcoin's great. The upside is great. Yeah, I'm going to give it up, but also I'm alive and I've got a family and I've got a house or I want a house. And I think all of that stuff just comes to a head. 100K is a big number. People have been around for a long time. It makes sense.
The question is when some of us are ready to sell, as you say, will we be selling for fiat or will we be using the Bitcoin to buy the lifestyle we want?
Yeah, it's an interesting question. I'm not as confident that we get to that point. And let's go back to the Treasury Secretary Percent's tweet. There is a case, a very arguable case that we are heading to a world where it is in fact going to be acceptable on that front. I generally think that the medium of exchange element of Bitcoin, I think, is going to be a much harder pill to swallow because people don't want to give it up. They do want to hang on to it as that store of value. And I actually think that the store of value into the medium of exchange will take a lot longer than people expect. I think generally speaking, we're going to have a lot of store of value up front, probably for several decades. And then over time, it will start to move to that realm. I don't think that the average person is going to give up fiat. I don't think the government's going to give up fiat. I think taxes are always going to be paid in fiat. I think generally speaking, there's just a lot of forces at play for people to continue to use fiat for what it is used for. Uh, People don't like change. Governments don't want change. They don't want people to use something else. So I do think that we're going to end up in an environment where fiat will continue for a long time, unfortunately. But look no further than the Genius Act, right? They are clearly trying to get stablecoins. Not only do they want stablecoins to be a thing, but they want them to proliferate through the entire world. They want to dollarize the whole world with these things. That is not, you know, fiat falling over and dying. That is the dollar dominance doing what it does. Because this is the thing: if you're in Turkey and you've got the lira and it, collapses all the time, of course you're going to go and get Tether because it's just better than the lira. So, for most countries, it's not the governments. Like the Turkish government doesn't want people buying Tether, but the people are buying it anyway. So I think it's a fascinating dynamic of like dollar, Bitcoin, gold, that kind of mix between those three is really going to be it is a massive macro story and it's going to continue for decades ahead.
Yeah, it's really interesting to think about.
Very.
I read that article by Jordy Fissett also, and he was very bullish at the end.
Mm.
In one of our last chats, you said the market top could be 129 to 150. What are the chances that we've already hit the all-time high at 126?
Very, very good question. I think there's a few ways to think about this. I think it's a silly term that may, in this instance, have some validity to call it bullish selling. Geordie's position, I think that there is a lot of merit to this. Geordie's position is that there is so much selling, and in this IPO moment, assets tend to trade sideways for 6, 12, 18, 24 months. The amount of sell side that we're seeing right now, it's the second highest peak that we've ever seen. The highest peak was in November, December when we rallied to 100K for the first time. The difference with this current selling since April is it's sustained. We're up at like $2.5 billion a day and it's not letting up. It just keeps going. So you have to ask yourself, we are still trading above 110K. So I love in markets to hold two views at the same time because I think it's really important. There is so much selling right now that any rational analyst would say there is a very real chance that the top is in. There's another side of me which goes, yeah, but why aren't we lower? You know what I mean? Like sell side is buy side. Sell side is the Newton's third law, equal and opposite reaction. There's a lot of buyers. And these buyers are not FOMO buying and like ramping the price higher. They're allowing the market to come to them. So this is a very sophisticated behavior where they basically they get sold to. If you're a retail investor, a lot of the time you'll go and just smash buy, right? And you'll go and take the best ask. These guys are just sitting there with like, again, $2.5 billion a day. This is not small chump change. They're sitting there allowing the market to sell to them. I will absorb your supply, but I'm not going to chase this thing. There will come a time where we simply run out of sellers. And then all the coins, like think about the kind of buyer who's just sitting there with billions of dollars, just going, thank you, thank you, thank you, thank you. They're not going to sell. Like these are allocators. These are investors. These are not traders. The momentum traders, as we saw, are leaving. 6 months to 1 year old coins, they are bailing out. So the momentum guys don't care. This isn't some hedge fund that's looking for a quick 30%. These are guys who are buying because they want to hold. Now, they could be retail, they could be institutions, they could be sovereigns. So whoever they are, there's a lot of them, and they're just accumulating. I think this is the most important thing. They are accumulating above 100K. Their mindset is not that Bitcoin, I missed it because it was $100. I missed it because it was 1,000. I missed it because it was 10,000. No, they're saying my entry point for billions and billions and billions of dollars is 100K plus. So it's like, I say this, and again, we could go into a bear market and we can talk about that framework as well, because I think it's important to always keep these in mind. But I also I have this line, Chop-Solidation kind of builds floors more than it builds ceilings. We've got 62%. It's actually probably more than I need to check the numbers. I'll do it tomorrow. We've got 62% plus of all the wealth ever invested in Bitcoin from an on-chain perspective above 95K. That's our new home. So the bear case is, I mean, you really don't want to see what happens when all those people go underwater. So I don't want to go below 95, that's for sure. However, that's a lot of demand. That's a lot of demand saying, yeah, I'm happy to buy Bitcoin as a $2 trillion asset. It's kind of bullish selling. You know what I mean? Like it's a stupid thing to say, but it kind of looks like bullish selling. Don't allow that potential or possibility to just cast it out, because like there's a lot of people looking at this and going, yes, the sell side should kill this bull. It has killed every single bull every time we've seen this kind of sell side. And yet here we are at 110K. Incredible stuff.
So do you think the 4-year cycle could be over or muted? Many people say the 4-year cycle is over, but could it be more muted?
I don't actually think the 4-year cycle is as important as people have thought for many years. I think it was like it's almost the anomaly was that we had the 4-year cycle. So again, it's one of those things. There's a lot of people who are going to trade this 4-year cycle believing it's true. Which, by the way, November and December are usually the months where it's the most explosive. So if you believe the 4-year cycle, then the next 2 months should be fireworks. I think that if we go, there's kind of two major tipping points or regime shifts, I'll call them, in Bitcoin's history. The first one's the 2017 top. The 2017 top, we moved from a retail dominated, like it's Bitcoin only. Yeah, there's altcoins, but really it was like the first time that Bitcoin became a household name. 2017, that changed we had stable coins after that. We had derivatives come up after that. We had a lot of like Bitcoin might make it. Bitcoin dominance was low. Like maybe our altcoins are going to flip it. There's all this like narrative stuff. The altcoin space was trying to build everything. Then we had FTX, and FTX really changed a lot. Now, whether that was just a signpost or just an event doesn't really matter, but we are now in a much more institutional cycle. We started seeing things like Chop-Solidation. The market structure is clearly different since 2023 onwards. And those regimes really speak to a very different, like Bitcoin's a different creature. And if I go back and look at those first two cycles, the adoption driven cycle by retail up to 2017, Bitcoin's a new thing. No one knew what this thing was. So like people are buying it because it's interesting and new. In that middle period, 2018 to 22, a lot of people are betting on, is it going to make it? Is it not? Put some leverage on. It's just a trading asset. It's just speculative. No, I really believe in it. There's a lot of like competing narratives. It's a real ebb and flow. After 2023, Bitcoin has won. Like it is now, we've got the ETFs, we've got it getting hooked into Wall Street. It's getting recommended by some of the most prolific and respected investors in the world. It is now part of the common lexicon, so much so that people are bored by it. So Bitcoin very much responds to the world now. People buy Bitcoin because they see a problem in the financial system. They see a problem with the debt. So in a way, Bitcoin is much more likely to respond to the market cycles rather than its own internal stuff, because it's not a new thing. People aren't responding to its halving. They aren't responding to internal things. They're having Bitcoin as a part of their portfolio, and their portfolio changes based on what's going on with the rest of the world. So the world doesn't really operate on 4-year cycles. So therefore, I think there's a very strong case to say that, well, maybe those internal cycles were just the bootstrapping phase, and Bitcoin is kind of on its own journey. And it's just a part of the overall mix of what's going on in the world.
But at the same time, you mentioned that it's quite a good idea to prepare for a bear market
Mm.
just in case. How do you do
Yeah.
that?
Yeah, exactly. So I try to think about this from like, what is my time perspective? So when I write, I've got a lot of clients who are, some people are retirees, some people are professional money managers. They're going to be much more sensitive, right? They can't take the 30, 40, 50% drawdowns. So if there is a risk involved, I have to be quite structured and say, look, here's what I think the risk profile looks like. I mean, a large portion of my audience, they're just happy stackers. Now, they don't like when the price goes down unless it goes down a lot. And then they like it a lot because they get cheaper Bitcoin. But a lot of people obviously want the price to go higher. So I try to at least always map out both scenarios, because I think it's important to, because the truth is none of us know how this market plays out. Now, in a bear market type scenario, I mentioned that 62% of all dollars. If you go below 95K, it's like there's just a lot of people who are going to be like, oh man, not good, not fun, right? That's just a lot of money to be underwater, and it gets much worse the lower you go. Now, interestingly, if we have I think it's a 30% correction or 35 or something, if we go down to about 80K, that is actually no worse than the dips that we've had in in early 25 in like March and April. It's also no worse in 2024. But like imagine seeing Bitcoin back at 85K. Most people are going to lose their minds, but it's actually a dip that is still on par with the dips that we've had so far. It's quite remarkable. There will be a lot of people underwater. And I worry that a lot of people like it'll break their sentiment. But for me as a hodler, if you're going to give me Bitcoin with an 8 handle, I am going to step into that all day, every day, because 50K is $1 trillion, 100K is $2 trillion. I believe in 2024, we proved that we're a $1 trillion asset. So if you're getting down to 80, that's kind of halfway between those two extremes. I mean, the ETF cost basis is there, Sailor's cost basis is 75. There's a model I use called the True Market Means at 81 or 82. All of these models, like there's just a huge chunk of pain right there at 80, 85. And pain is good. Pain is the kind of thing that puts bottoms in. And I can just imagine the capitulation candle. For me as an investor, if you give me $126,000 Bitcoin and we're going to go to 150, that's great. That's like a 20% move. Cool. If you give me 80K to 150K, we're almost getting a 100% move. Now that's really attractive. So the lower it goes, the more interested I actually become. So I think there's a lot of investors with that same mindset. So my view is that any bear market, like if we go down 35% to 80K, it will feel like a bear because it feels like a bear at 110. If we go, it feels like a bear market, but like, is 35% a bear market? Really? Like people are just going to lose their minds. They're not going to understand which kind of framework it is. And to me, that's quite interesting because we're going to have to see how investor sentiment shifts and changes. But I think there's about 30% chance that we get that bear market environment, probably about 70% that we're bull. That's where I generally sit. And unfortunately, that's a bit close to a coin flip for my liking. I'd like to be a little bit more solid, but the truth is the market has no momentum, literally sideways for 12 months. It has gone nowhere. Very, very difficult market to read. Bullish selling kind of feels like bullish selling.
Yeah, it could be a couple of fun months, but we've been waiting for it for so long that, well, if it doesn't, it would be okay. Do you have a prediction? I know you don't make predictions, but a guess of where it would go? And would it be this year or would it continue into next year?
I don't think we will be in this trade range in 2026. I think that, like, no matter which way I want to slice this thing, there's a bunch of tools that I use to try and track like how ready to move the market is. Choppiness index being one of them. Price range, how long's it been here for 90 days? What's the realized volatility? There's a whole bunch of things. Bitcoin is the most boring, static, sideways nothingness that we have ever seen. Full stop. I do not believe that we stay here in this price range for very long. I think it is time to move. So I very much doubt we end the year in this price range. And really, ultimately, and it sounds kind of useless, but the real question is, I think if we run, we go to 150 at least. I just think that is written in the stars. And ultimately, the question is, do we go down to go up or do we just go up? That's how I'm really thinking about this market right now. I don't think we go down and stay down. I think we go down to go up or we just go up. That's my like core base case theses that I'm working with at the moment because I just think Bitcoin is so undervalued. It hasn't moved the way that the fact that gold's gone up, silver's gone up, NASDAQ's gone up, Nvidia's gone up, Bitcoin's sitting there doing nothing. It's driving people mad, but that pent up energy, just imagine, go to your trading view and just add a green candle that goes to a new all time high. Just think about how many momentum traders are going to come roaring back into this thing because they're like, oh no, I sold out thinking the 4 year cycle, bang, this thing can just absolutely rip. So I really do think that there's just this pent up energy. Does it release to the downside? If it does, I think that creates just a slingshot move higher. If it goes straight up, then I just think the momentum traders are going to come roaring back in.
Yeah, that could be a fun time and then an interesting time afterwards. And I was talking to you a little bit about that hodlers seem to care less about the Bitcoin price movement in the short term because many of us are hodling for the long term. But however, people waiting to either sell altcoins or the treasury companies, they care a little bit.
Yes.
Is that part of also why you track?
Yeah, I think that dynamic of like the other assets in and around Bitcoin, I actually think that's a non-trivial part of this cycle's market structure. And I do think it's a very non-trivial part of our psychology and sentiment. So to give some color to that, sentiment this cycle on like a 5% pullback is like bear market level. It's quite remarkable to watch. People just lose their minds over the smallest pullbacks. But the reality is that the pullbacks are not occurring, that they're like reacting to. It's not the 5% Bitcoin price. It's when the Bitcoin price, so we saw that deleveraging the other day in October, Bitcoin sold off 12%. Some altcoins literally went to zero. Like the price actually went to zero because there was no buyers. So people just got wiped out on that event. 60%, down 80%, down 50% in 10 minutes. That's nasty stuff. And if you think about who was wiped out in those trades, there's a lot of like altcoin guys who've been around for years and they've made a bunch of money and they've been waiting for this alt season, and the alt season just hasn't happened this cycle for them, certainly not the way they thought. And then they finally get a Bitcoin all-time high and they're feeling like this has got to be it. And they go max long and then they just get cleaned out. So you think about all those poor guys who like, they kind of liquidated their many years of work to build up those accounts. On the treasury company side, a lot of those stocks are down 90% plus. So, a lot of people bought in, and like, this is the thing, there's a lot of pushback over this because, sure, I think treasury companies says there's a case to be made for some of these things moving forward. But let's not kid ourselves. When you actually go and look at the volume, when you go and look at the number of investors, Metaplanet, for example, they've got a literal dashboard that shows when their investors came in. 50% of their investors came in at the all-time high. That stock is down, I forget the exact number, it's at least 60%, 70%. I believe Metaplanet's going to bounce back, but that's a really nasty chunk to take out of your portfolio. So I think a lot of people have held not Bitcoin, expecting levered kind of alpha on top of Bitcoin, and I just think they've got crushed. And I think that's a huge part of why sentiment's down on small moves, because it's just like it's hitting other parts of their portfolio, not their spot Bitcoin holdings. And then I think a lot of people just aren't long enough spot Bitcoin, which is kind of interesting.
I really enjoy your newsletter and I highly recommend it to everybody. In it, you often talk about check the hodler and check the analyst. Where are you on those two today?
Yeah, good question. So check the analyst is about 70% bull, 30% bear. And it's more the bear case. I don't think this is a full scale like bear market, 80% down, see you in 4 years type environment. I don't think that's the case on either side. But I do have to write and be very conscious that there are people out there who do not want to go down to 80K. So I want to at least frame up that $80,000 scenario. Could we go lower than that? Yes, but it's not my base case. That I want to frame that up so people can think about it for, at this case, at this time, it's been months where we've actually had this kind of working thesis. But I want people to just envision themselves what happens if we go to 80K. How will you feel? Go through those motions now so that you're prepared if it does happen. So I think there's about a 30% chance that that kind of event happens. One of the reasons for this is that if we go down to 100K, we break out the bottom of what I've been calling the indecision box. If we go below 100,000, the trip between 100,000 and 95 is very small, but it's like an exponential. So many coins then fall underwater, and the ones that are already underwater get significantly underwater. There's like a exponential decay where things can just, from a sentiment perspective, get nasty really quickly. So from the bull case scenario, we're still chopping around 110. 105 is like the midpoint for this type environment, and we've defended that so far. But it's not a big price move from 105 to 100 to 95. That's a very, very small gap, and things can deteriorate very quickly. So that's where that 30% comes from. Now, check the hodler. He's a little bit more in the kind of, let's take Geordie's narrative and say that kind of feels right. Like the sell side is incredible. It's astounding to watch. And until very recently, and so honestly, probably still, I feel very unsatisfied with my own explanation for how it can be so large and the price not go anywhere. It just, for a nice little kind of easy way to think about this. Granted, it was back in July, but we saw Galaxy OTC sell about 80,000 Bitcoin. Some whale wanted to exit. The price went down 3.5% and was back up by afternoon. The last time we saw 80,000 Bitcoin get sold, it was Luna when they imploded in early 2022, and the price went from 50K to 17. So like, they are worlds apart. So at 110K, we can liquidate 10 billion and the market goes up. And back in 2022, we sold 80,000 Bitcoin at 50K and the price went to 17. So, like, just two very different animals. That is not the kind of environment. Like, that tells you a story about demand. So, check the hodler just looks at that sell side and goes, but think about the other side of the book. Like, the buyers are serious, serious money. How can I be bearish when I've got that kind of buy side underneath me? So, like, from a rational perspective, be careful. A lot of supply, a lot of sell side, but guys, it's being absorbed. Really, really incredible stuff. So, yeah, it's a fascinating dynamic. Very, very hard to read this market. I would say, because we've been writing since April 24, this is the hardest environment to write because in a euphoric bull market, the warning signs are everywhere. It's just a question of when. In this environment, there's a question of like, what if the bull just dies of old age, just like rolls over because it doesn't have any momentum? And that is we've never seen that with Bitcoin before. That is a very unique type of environment. It requires a lot more just almost philosophy, trying to get your head in the minds of a momentum trader, of a hodler, of an investor, of a big capital manager, of an options trader. You've got to understand all these different mindsets and like where their pain thresholds are to try and get a bit of a grip on like where is sentiment because it's sideways, it's nowhere.
And I heard you recently say that you sold your strategy. Is that why? Because you're kind of not 100% sure which way it's going, and also that's lagging.
Yeah, primarily my thesis for when I bought the MSTR shares, it was when we were coming up to that 124K, I think it was in August, that first all-time high. As we started curling up towards that, I bought MSTR because I'm like, if Bitcoin's going to rip and it looks like it wants to rip, MSTR should run harder. We went to an all-time high. We got slammed back down, but MSTR underperformed on the way up and then got slammed even harder on the way down. So I kept holding it. And by the way, it's like 2% of my portfolio, basically my risk play for the cycle. We went back to 126K. Now, before we got slammed down by that deleveraging, MSTR kind of kept up with Bitcoin and then we got nuked and it just got wrecked. So my thesis was Bitcoin is about to rip to new all-time highs and I want a levered play on Bitcoin. On both fronts, the levered play on Bitcoin, I mean, yes, to the downside, but not to the upside. And then also, we didn't rip to all-time high. My thesis was wrong for why I bought it in the first place. So therefore, I exit. Like, I still think MSCI is going to outperform at some point in time. But the thesis when I put my position on was invalidated. And therefore, I had to ask myself, why do I own it? Right now, why do I own it? So at that point in time, I actually sold it. And then I had some capital on the side, which helped me this is the way that I like to kind of think about my portfolio. If I was to sell everything that I own right now and go back to cash, would I rebuy everything that I own? And MSTR was the only thing that didn't pass my checkbook for that. So therefore, I sold it because it was the only thing that I didn't want to rebuy right then and there. And I may think about rebuying it, but the truth is, I don't know. Like when you think about what it will take for MSTR to truly kick Bitcoin's ass, the MNAV has to expand. Like for me to be interested, the MNAV's got to go to like 2. It's got to expand to 2, which is like a 2x outperformance. And then I truthfully ask myself, will MSTR, like an MNAV of 2 kind of implies that they might double their Bitcoin stack. 640,000 Bitcoin's a big number. And that makes them they will be a very valuable company. But can they get to 1.2 million? I don't know. I think that's if Bitcoin rips, the probability that they can get to that size actually decreases, in my opinion, because it's harder to buy. Like, sure, they will be able to raise more money and issue more debt and all that. But I'm just not that convinced that in an era of chop-solidation, which may well be part of our future moving forward, I just don't think there's my thesis. I need to see it play out a bit longer, right? So I could have a position. It wouldn't bother me if I did, but it just wasn't the right thesis for the time. I was invalidated. I exited, and honestly, I'm just buying Bitcoin because I get it. It's simpler. I don't need to go down that extra risk profile, but I'm certainly a keen observer because I think that there will be periods of outperformance, and I think it will be quite dramatic.
And for most people, it is just simpler to buy Bitcoin. Are you also an advocate for self-custody?
Absolutely. I mean, that's the thing, right? We're moving into a world from a macro standpoint where governments are literally bankrupt. And when governments are bankrupt, they do dangerous things. And they don't do dangerous things with their money, they do dangerous things with your money. So self custody Bitcoin, I know that they can't get it. Like that is mine. That is actually mine. ETFs, in theory, they could take. They could shut down. They could close down. You could get sold out. I think about this with my gold ETFs because I have gold via an ETF. What they could do is say, "Thank you very much, Mr. Investor. We're actually winding up this ETF. Oh, by the way, gold's now we're going to revalue it higher." So there's a very real possibility that you actually may get paid out before the actual move happens, the devaluation. So there is all of those risks. Now, again, small chunk of the small risk on a relative basis, but history tells us that governments do some dangerous things during this point in time when they are bankrupt and they've got a sovereign debt crisis and so on and so forth. I talked to my old man about this again, and he goes, "There's no chance this happens." I said, "Okay, what if the Australian housing bubble pops and suddenly they've got to bail out and nationalize the banks, and then the Australian dollar is getting cut in half? What about now?" And he goes, "Okay, yeah, no, fair." I'm like, "Well, now you have to assign odds for when do you think that happens? Because right now we have a bubble of the ages." And suddenly, those risks that seem so far fetched in normal conditions, let's just put ourselves in what may not be normal conditions and say, well, what's the odds of them happening? Oh, that's much higher than it was 2 years ago. Shit, maybe I do have to be a little bit careful and think about those. So that's for me, self custody makes a whole lot of sense. I also think that there is a case to be made for the ETFs as a tool to solve a certain problem. For some investors, they just do not ever want to go down the path of self custody. So I think just respecting the fact that there are going to be people out there who they just do not have the technical chops, they don't have the desire, they don't care, whatever reason, they're better off getting the ETF because it just removes that barrier, get them a flavor of Bitcoin, and then they can see where they go from there. But yeah, so it's a tool. It's a very important tool. I'm a huge advocate for it, but also I'm a pragmatist and I recognize that not everyone's going to self custody.
Holding your Bitcoin in self-custody is an important step towards self-sovereignty, but writing your seed phrase on paper is risky. Paper can burn, fade, or get lost. MICROSEED helps you stamp your seed phrase onto a small steel washer. Buy the device once and use it forever. I love it. It's durable, precise, and easy to transport. Use my link below for 5% off. Now, back to the show. I want to talk about the Sydney housing market. But before, you mentioned gold, and gold recently hit all-time highs. In the past, Bitcoin has always hit all-time highs after gold does. Is that true?
It tends to be, yes. So I mean, like, there's a lot of charts floating around where people are like, oh, let's put gold on a X number of days lead time, and yeah. At the end of the day, the way I view these two assets, they're two competing hard, sound monies. Gold's got thousands of years of history. The central banks own it. It makes sense as the bedrock for the new financial system, simply because Bitcoin isn't big enough and widely owned enough by the sovereigns for it. Like, gold has the history. Central banks own it. It's in vaults. They understand it. They don't have to question anything. Like, you'll be hard pressed having to convince anybody that gold is an investable asset. Most people understand, sure, they may say that equities are better, but I don't think you have to convince people that, like, gold's going to be around for another 1,000 years. I think everyone believes that. Bitcoin is a whole different animal. It's younger. It's going to take time for that it's slowly getting there, but there's still question marks. It's technological. People don't quite understand the tech side of it and how you can't see it and all these things. There's 1,001 human biases in the way. So I think gold is going to be a very important part of the financial system moving forward. It is really the only asset that is big enough, large enough, and lindy enough to replace treasuries as the savings vehicle for sovereigns. Bitcoin may become a component of that, but that's going to take many years. So gold is a very important. I do believe that gold and Bitcoin are going to go up together. They're both undebasable. Well, gold's more debatable than Bitcoin. I just think they're the only two assets that people can trust. And again, I'll use my old man again. He's like, because he's got a lot of gold. And I was like, should I buy more? It's like, why should I buy more? I said, well, gold's a bit of a Schelling point. If I tell you that we're going to meet in Paris and I only tell you we're going to meet you at midday, 12 o'clock, where are you going to be? And he goes, the Eiffel Tower. I said, yeah, me too. That's exactly where I'd go, because that's just like a common piece of knowledge. And I use that to explain gold. I said, look, governments are going bankrupt. Yields are getting wrecked. Inflation is super high. People are super uncertain. What asset they're going to buy, right? Companies start failing. That gets nationalized. What are they going to buy? He goes, yeah, kind of makes sense. They're going to go and buy gold because they're like hands off, don't know, scary, but I know gold's going to be there. So that is like, it's the shelling point of sound money. And I do believe that Bitcoin is that shelling point because, like, I think about my son. Is he going to be buying nuggets of gold in the future? Of course he's not. Like, it's dumb. There's a whole lot of people talking and saying that they're going to tokenize gold and that's going to make Bitcoin irrelevant. I'm like, tokenizing gold literally just proves that gold is in serious trouble because Bitcoin is a superior asset and you've still got, like, how do I know when I buy a gold token that I don't have a bar of chocolate wrapped in gold foil sitting in some guy's vault? I have no idea. So it just introduces all the same counterparty risks that Bitcoin just immediately solves. So by tokenizing gold, you're actually proving that Bitcoin is just vastly superior and is going to overtake.
But buying an ETF, a gold ETF, is the same problem, right? We don't
Exactly the
know
same problem.
for sure that they have all the gold they say they have.
100%. So, and this is where I've gone through the thought process. Now, the pain in the ass of owning physical gold is, I don't know if you saw recently, but there was photos here in Sydney, in Martin Place, of people lined up out the door to buy and sell gold bullion during the run. Now, I've been, going to the physical coin shop for many, many years, and most of the time when I'm like, "Hey, is it busy?" They're like, "Nah, no one cares. No one cares." So then when I see lines out the door, I didn't actually think about this. I'm like, and again, I don't have that much. I got a couple of platinum coins, but I was like, shit, now I've got to line up in those lines to sell it. And I realized, oh man, I have a liquidity problem because I don't want to line up in that line. I'm just going to hold it now. So there's that component, which is like, how do you actually exit? With the ETF, I hit a button on a Monday morning. So in many ways, like, the ETF gives me the liquidity profile of gold during business hours between 10 a.m. and 4 p.m., Monday to Friday. Great. But like Bitcoin, I can sell any day, all day, buy it, sell it, move it, transact it, shift it around. It's just 10x better on every single way.
Yeah, I agree. Tell us a little bit about the housing market in Sydney, and is it a bubble? Are you seeing something eventually come down?
Very good question. So it's a bubble that's been a bubble for basically my whole life. Now, we have a problem in Australia, which is it's a very good place to live, generally speaking. Certainly compared to the rest of the world, it's a great place. Beaches, safe, like, it's a well off country. Sure, we've got some real monkeys running the place, but, where doesn't? So from a general, like, quality of life standpoint, you're really hard pressed to beat Australia. Now, that doesn't mean we don't have our problems. And the housing market is the biggest one. Now, the way that Americans tend to treat their stock market as the savings asset, they buy the S&P as a savings vehicle. Australians, housing is a religion. So people will use their mortgage and their housing and they'll daisy chain houses and properties together. Now, we also have a challenge in Australia where, unlike America, we're about as big in terms of like physical size of the country, but the middle is a desert that you can't live in, inhospitable. There's parts of South Australia where people literally live underground, Cooper like literally underground in Hobbiton. So we have a very, very different environment because in America, it's all filled in the middle. People live the whole way through it. In Australia, we don't. There's very, very few people. So most of the population, albeit small, 26, 27 million, we're all clustered around a handful of coastal cities. So the amount of space, still, we've got heaps of space, by the way, but it's a favorable place to live. We have constrained supply, but also there is a component which is challenging to talk about. We have a kind of out of control immigration problem. And I also, like, and we were talking about gold coins before. A lot of our gold coins now, I think we've got the Australian kangaroo, but the vast majority of our gold bullion and silver bullion now have Chinese characters on, which, and they have a far bigger range of those. Now, I get it, but like, that really shows you that there is a lot of money coming from China. And if I was in China and I wanted to get money out of the country, I would do the exact same thing. I would do the exact same thing. So I think it's important to recognize where Australia is. A lot of our tourism comes from China, India, Indonesia. They are three of them, literally the most populated countries in the world. It's a very desirable place to live. We have a constrained amount of space. There's a lot of money looking to escape fiat. When you put all of these things together, and housing is that religion, it's the asset that people want to own. And because of that, it is completely out of control in terms of affordability. basically, if you take the average house, like I'm not in a bad part of Sydney, a fairly nice area, but by no means the best part of Sydney. The cheapest one you will find is like 3.2 million, which for Americans, we're about 67 cents to the dollar. So take off about a third. So that gives you a bit of a ballpark of what the average house is. But the interest, just the interest alone on a typical mortgage for that is about 200 grand a year. Our top tax bracket, where we go to 45% tax, our top tax bracket is 190 grand. So you have to be earning more than the top tax bracket after tax just to pay the interest on the cheapest house. Math don't math. Math don't math. I cannot understand how this keeps going. So we are so late stage in this thing. The challenge with this bubble is that the government wants it to go up for a couple of reasons. One, it's the wealth effect. Two, if it goes down, they're going to have to nationalize the banks because our banks like Combank, which is the biggest bank here in Australia, it's bigger than Goldman Sachs. Like, again, we've got 27 million people. How is our bank bigger than Goldman Sachs, which is a global investment bank? It just doesn't make sense. So it's a massive bubble. It's because it's highly in demand. It's because the dollar is getting debased. It's because a lot of people want to live here. And it's just so far beyond unaffordable. Like they have tiers of like median income to medium house price. They call 5x. So like 5 times, the house is 5 times your median income. They call that unaffordable. Sydney is up above like 13, 14, 15, depending on where you are in Sydney. They have impossibly unaffordable. We're now through that. We're through the ceiling of impossibly unaffordable. And you just look at this and go like, it doesn't work. The math doesn't make sense. And then you look at the rental yields that people get and they're falling through the floor as well. So rents are going up, but like it's the vast majority of people can't afford their rent. And there's only so much you can raise rent before people just go, I can't do it anymore. And we're in that position where like even the investors can't really get the yield that they expect because people simply don't earn enough money to pay the rent. So I feel like we're getting late in this event, but I also look at it and go, the government wants this thing to keep going. It's a really, really tricky environment. The math don't math. Hasn't mathed for a long time.
Just a quick question. Who can afford those houses? Is that foreigners? Because a young couple would either need their parents to help or they can't afford that.
I think that's it. It has to be. It's bank of mum and dad is a component of it. I think people are taking on just dangerously high levels of mortgage debt. I think that's a big part of it. The government keeps bringing out new policies. You can now buy one of these houses with a 5% deposit. So, and the government's going to ensure that. We're starting to look like 2008 type environment here. And foreign money. For example, there's parts of Sydney where the real estate agents don't have any English on the signs, which I get it, but like that's obviously not targeted at me, is it? Like I'm not buying properties from that real estate agent. It has to be foreign money. And again, I don't actually blame the foreign money. I would do the exact same thing. But I also pay tax. And the government's job, I view the government as a mob. I pay my tax, my extortion fee on the proviso that they look after me. That's the whole point of paying tax. And they're kind of not doing their job. And, that's the government, right? I don't really expect them to give me any handouts, but I think you also just have to take a very pragmatic view on this thing and say, guys, if you do not fix this, your young people are going to be just so much worse off. I certainly hope that's not the plan, but you kind of look at these things and go, what other view can you come to?
That's really interesting. Bitcoin
And it's not
really
just
is.
Australia.
No, it's not. I mean, I'm a real estate agent in Miami, and we have these FHA, which is a first home buyer loan, and you can put 3.5% down. And yeah, prices
The
are
prices
starting to
keep going
come
up.
down here, but long term, I don't think so because people aren't all buying Bitcoin. Not
That's
yet.
it.
I
And that's
mean,
the other thing, right? When I price the Australian housing market in Bitcoin terms, it's the cheapest it's ever been. So for me as a Bitcoiner, like if I didn't have my savings in Bitcoin, impossible, completely impossible. With Bitcoin, the math makes sense, but I don't want to, like if I look at my mathematics, I'm like, give me another couple of years. Give me another couple of years and then it becomes enticing because I can price the housing market in Bitcoin terms. That is by far and away the only way that I can see of actually chasing this thing. And it is like Bitcoin is not only chasing, significantly outpacing the Australian housing market. And to my analysis, really one of the only assets it is.
Yeah. Yeah, and it just makes much more sense as an investment. That
Totally.
to live in a house, that's a different thing, but as an investment, yeah. Do you have a personal Bitcoin philosophy?
I mean, I think everybody does, and I've been amazed at how much it. Like, I think Bitcoin it changes you for sure in the way that you think about things. I've always been a saver at heart, and my definitely my behavior patterns is one of a saver. It has certainly changed the way I think about time preference. And going back to the conversation about having a kid, that's one of the most interesting dynamics because like Bitcoin really lengthened my already relatively long time preference. Really thinking about that longer term before I even knew that I was going to have a kid. I was saving for whenever I was going to have a kid. So that kind of perspective. But then the flip side of that is that now having a kid, my time preference is simultaneously the rest of his life. That's, as long as it gets. And also dealing with the next time he shits himself. You know what I mean? Like your time preference is simultaneously right now. I don't have time for anything except for this screaming kid. And I'm also saving for his like, where is he going to be in 18, 20 years? That to me, like Bitcoin is a really nice gel in that framework where it just helps people think longer term, slow down, identify what matters. I wouldn't consider myself to be a consuming type person. Like I don't really have that much stuff for me. My kid's got more stuff than me. He's 8 weeks old. So like I don't have that many things in my life because I just don't care for them. I'm much more, I prefer the experiences. I prefer just like having being comfortable and just enjoying going outside. So I think that it brings out the best in people in many ways, helps people kind of reach their potential, which is amazing. And I've said this many times before. I would love to see what happens when we move into a world where politicians own Bitcoin, because maybe we might get some long term thinking. People actually might start thinking about, hey, how does this impact stuff, over the longer arcs of time?
Yeah, and take a bit of that stress away. I'm sure you knowing that you have Bitcoin gives you a lot more peace of mind going
No
forward.
doubt. No doubt.
Well, thank you so much, James. I really appreciate you joining me today. Tell us where people can find you.
Thanks, Paula. Thanks for having me on. Yes, you'll find me over at checkonchain.com. We do 2 newsletters a week, both around 2,000, 2,500 words, which also have a half-hour video, again, just trying to help people navigate what's going on. And we also have a charting website, which all the charts are free. I mean, if you can't find a Bitcoin chart there that you're looking for, I'll be amazed because there's so much there. There's so much that even I don't use half the tools, but there's so many of them, and that's all free. So check those out.
Great. Thanks a lot.
Thank you.